This strategy is actually surprisingly effective. So as you can see guys, we lost this trade. What's up guys, it's your boy iamXO, and in this video I'll be showing you guys an insanely profitable and easy to understand forex trading strategy using the Ichimoku Cloud and the Fibonacci Retracement tool. And also, only a small percentage of people who watch my videos actually subscribe. So if you end up liking this video, please make sure to smash that subscribe button, click on the bell icon to get notified on every single video I make, and leave a comment on what videos you want to see next. I'll try my best to make it. Enjoy the video. We have to summon the Ichimoku Cloud on our chart. And how do we do that, guys? You clearly come to this point, you search for the Ichimoku Cloud, and there it is, the Ichimoku Cloud. And as for the Fibonacci, we don't need it yet until we want to take our entry. So I will not be explaining what the Ichimoku Cloud is in depth. You can go watch my video on the Ichimoku Cloud. I really gave an in-depth explanation and everything you need to know about the Ichimoku Cloud on that video. So you can go to that video now and watch it. I will leave a card up so you can watch it after this video, or maybe watch it now and come back to this video. I don't know, but the Ichimoku Cloud, guys, I'm just looking for a cross on the conversion line and the baseline. So clearly when I see a cross at this point, you can clearly see a cross. Guys, look at my mouse. This is the cross on the conversion line and the baseline. And I will not just jump into a trade because I see a cross on the Ichimoku Cloud conversion line and the baseline. As you can see, this black line on this chart is the 200 exponential moving average line, which clearly helps me split price into two and showing me where buying and selling momentum and pressure is, like which phase of the market are we in. Okay guys, so at this point you can see there's a cross on the conversion line and the baseline. So I'm clearly looking to get in on a trade with the Fibonacci retracement tool. Just because I see a cross on the conversion line and the baseline doesn't just mean I will just jump into the trade. So I'm clearly looking for a retracement. I'm looking for a retracement clearly. So the Ichimoku Cloud line and conversion line crosses the baseline at this point, and this is where my Fibonacci retracement tool comes into play. So I'm clearly looking to draw my fibs from this point to this point. Alright, so from this low to this high at this point, where the market's clearly moved all the way down, and I'm looking to get in on a trade on the 50 or the 61.8 zone. So as you can clearly see, the market didn't come back to that point, but on the 38.2 zone we saw this beautiful engulfing candlestick at this point. So if the market should have retraced to the 61.8, I'm looking to get in on a trade on an engulfing candlestick. The same thing goes for the 50 zone, and since it clearly showed up on this 38.2 zone, I'm looking to get in on a trade at this point, at this engulfing candlestick right here. So my stops and target is, I use the ATR. I clearly use the ATR on all my trades, and for this pair is the Dow Jones, the US 30. So the ATR value of this pair, you can see, look at this point, the ATR is the average true range. You can get that on your chart by searching on this indicator section, the average true range. So the average true range of this engulfing candlestick is 44.6. so 44.6, then I use the 1.5x the ATR, which is a 67 pip stop. So guys, I'm looking to get in on this trade for a buy for a 67 pip stop. So as you can see guys, we lost this trade, guys. So guys, there's no 100% win in the market. So you win some, you lose some. Like I always say, the outcome still remains income. So we lost this trade, so let's look for a different entry. I'll get back to you guys. Okay guys, at this point, for this is a selling trade. So at this point you can see that conversion line crossed the baseline at this point. So clearly I'm looking to get in a trade. So clearly the market smashed through this EMA line and I saw a retracement. So I'm looking to get in and bring out my Fibonacci tool after a retracement. So the first thing first is you want to see a conversion line and the baseline cross. Then you want to see the price. I forgot to say this at the buying setup. So you want to see the price at below, like for a sell, you want to see the price below the cloud, which is the Ichimoku Cloud. You want to see the price below the Ichimoku Cloud, which is this cloud line. So a baseline cross of the Ichimoku Cloud, and price should be below this cloud. and the 200 EMA line, which happened on the first trading setup. I didn't even take note of that, but that was subconsciously in my head already, so I forgot to say that. So as you can see, this setup met the criteria. There's a cross in the conversion line and the baseline. The price is below the cloud and the 200 EMA, and there's a retracement. So after we see the retracement, we want to bring out our Fibonacci retracement tool and join from that point after the cross. So clearly this would be where the Fibonacci will be. So the market came back to the 50 zone. So guys, you can see the 38 zone where we took our first trade for the buying setup, but you can see there was an engulfing candlestick. So the market actually got to this 30 and 50 zone at the same time, which is this box right here. But clearly I will call this a 38.2 zone. So well, as long as we saw the engulfing candlestick, I don't have any problem. I don't care if it's the 50 or the 61.8 or the 70. At least my best entry levels are this 30, 50 and the 61.8. So I can see the engulfing candlestick at that point. So what is the ATR value? The ATR value for this pair is 102. So the first trade we took was on the Dow Jones, the US 30. The second trade is on the GU, the GBP USD, the British Pound USD. So 102 times 1.5 will be a 153. So clearly 153. So for a sell on the engulfing candlestick, a 153 pip stop. So guys, like I said, a 1 to 1.5, a 1 to 2 is a good bet. So if you want to trade your stops, you can trade it. You can if you trade your stop, you could have covered all this move for a 5 hour. Who knows? Maybe your stops would have been at this point for a 3 hour before you got taken out. So this strategy is actually surprisingly effective, like if you know how to use it. So I'm not just telling you to go trade off the Ichimoku Cloud or trading off only the Ichimoku Cloud or the Fibonacci or the 200 EMA. I'm combining all these three strategies together to make one whole strategy to help you filter out bad trades. Most times it's not just all about using an indicator, it's all about filtering out the bad trades. Clearly, Ichimoku Cloud indicator is one of the lagging indicators we have on the foreign exchange market. So adding in some more confluences like the Fibonacci retracement tool, the 200 EMA, and some other like retracements, so you can clearly see that you can filter out most of the bad trading setups in your trading strategy. And guys, if you can trade like this, like if you can backtest this and see if it's profitable or not, guys, you have the potential to actually be profitable. So if you end up liking this video, guys, please make sure to subscribe, like this video, and share this video with your friends. Leave a comment on what video you want to see next, and I will try my best to make that video. I hope you have a great and wonderful day. It's your boy XO, and I am signing out. Stay XO.